10 points on what this big, beautiful bill has done so far. I want you guys to really pay attention to this. These are the top 10 reasons for how the big, beautiful bill has helped Americans. Let's go through them. Number one, manufacturing boom reality check. The immediate depreciation delivers factory investment up 340%. So in the past, you could take up to 360 days on some portion, that's a 1-year term, 65, to depreciate, or 5 years, or 10. Large equipment had to be depreciated over 30 to 35 years. That has changed to depreciated in the first year of purchase. That doesn't apply to billion-dollar purchases, but the majority of small businesses can write off all of that in the first year. And of course, when you can do that, that keeps your bottom line cleaner going forward. The result, construction permits for manufacturing facilities hit 40-year highs in America. The regional winners, Texas, Ohio, Michigan, that's a red state, and 2 purple states, seeing massive capital inflows, and the governors there are absolutely loving it, as you can imagine. Labor shortages emerging. All right, skilled manufacturing wages up 25%. This is like going back to COVID when there were more jobs available than there were people to fill them. We are back to that point again because this fiscal policy of this big, beautiful bill is encouraging what? Domestic manufacturing production. That's what we all want to see. We want to see more jobs here. We want to see industry building here and selling to our people. So the reality versus the promise, they exceeded expectations, but created this new bottleneck. In my opinion, that's a good bottleneck, but it still created it. All right, point number 2, the state budget crisis. The SNAP and the Medicaid costs crushing state budgets, winners and losers. No surprise here. Red states like Florida, Texas, Tennessee, Alabama handling the transition very well. Blue states like California, New York facing budget emergencies. Well, you guys couldn't see that coming, really. I mean, the problem with that is you don't prune your Medicaid rolls, and now you're going to have to do it because the municipal bond spreads are widening. What does this mean? If you're in a state that sells bonds to try to raise revenue, you're not going to be able to do it as easily because the spread on the bonds is so wide, it discourages people from buying because if you get in, you got to pay a big penalty to get out because the spread is so wide on the bid and the ask, all right? So the investment angle here is state-specific municipal bond opportunities. We're looking at those, although the only program that has fixed income is our GI program. So the Trump accounts phenomenon, why did nobody ever think of this? I mean, this is savings for your kids with support from your employer, right? $2.8 billion flowing into the stock index funds from baby accounts. And this is in the first 6 weeks. 400,000 new accounts opened since July 2025, creating all kinds of structural bid for the U.S. equity markets. Why? Because as more people buy into the accounts, you have to have stocks to put in these funds. So the stocks are being bought and allocated into these funds by the companies that issue these securities. Employers contributing the $2,500 max becomes a recruitment tool. Oh yeah, you want to come work for us? Every kid, we're going to match that $2,500 plus your 401k, plus your health benefits, etc. It is a recruiting war out there, and the Trump administration just gave small business employers another tool. The market impact, sustained inflows supporting a small cap rally, which we are seeing and participating in, especially in CG. Number 4, the clean energy sector collapse and recovery. So from $500 billion in cuts to the private capital surge, this is a sector reinvention. And that is because this administration does not want the federal government in the business of investing in energy. They want to facilitate and incentivize private industry to make those investments. Government-dependent companies were eliminated. They're just not going to be buying anymore. And the private capital filling the gap with profit-focused projects. So no more benevolence here and enabling companies that are not independently supportive. You have to compete in the marketplace, and that's the way it should be. So there's a nuclear renaissance accelerating without these subsidies because these companies want to stay in business and they're doing what they need to do to survive. So this is positive for nuclear, all right? So the contrarian play that we're looking at, surviving clean energy names at deep discounts. We are not value investors, but as we see companies like First Solar, Fizzler, FSLR, taking off and reacting to how investors are responding to this, we're looking for opportunities like that in our growth programs. Number 5, and this is a biggie, biggie, biggie. Many of you on this call are about my age, all right? 90% of seniors will pay zero federal tax. That is a consumer spending surge. I need to read that again, and I want you to take it in. It doesn't apply to the tax year that we're in right now, of course. Well, it does when we pay taxes on it, but it doesn't go back to 2024, obviously. But it means when you're paying taxes in April of 2025, your bill is going to be dramatically lower unless you are making really big time money, like over $250,000. So senior spending is up 18% year over year. Healthcare, travel, luxury goods benefiting. All right, that's a great thing. Regional economic impact in retirement communities. Can you imagine the retirement community and people that were having to pay so much in income tax, and now they can allocate that toward maybe long-term care, maybe taking trips with their family, maybe having a little higher end apartment or condo in their retirement facility. I mean, it's just changing so much. It's hard to even keep track of, honest to goodness. So the winners, consumer discretionary, healthcare, and real estate investment trusts, because that would apply to these entities that are buying and building these facilities. Number 6, the Medicaid work requirement experiment. Red states succeeding, blue states resisting. I get it, no surprise, creating economic migration. That means people are moving to states where they have a better opportunity to find jobs, all right? Interstate migration patterns are changing. Labor force participation rising in the implementing states. Why is that? Because you have to. If you want to get any kind of benefits, you have to work. You can get benefits, but you're going to work to get it back. You're not just going to sit around and get the benefit. Those days are over. Legal challenges, of course, they will all lose in the Supreme Court. Investment theme, regional economic divergence plays. Working on that as a strategy, but in general, this is just a great thing to require every American who's able-bodied to work for any benefits that you receive that you did not earn. We want to take care of those less fortunate in society. We do not want giveaways for those who are fully capable of working. Number 7, small business formation explosion, entrepreneur visa program and tax cuts, a startup boom. I expect to see more small businesses starting this year and next year than I've seen in 20 years. New business formations already up 45% year over year. That means from July 25 back to July 24 of last year, obviously, 45%, almost 50% gain. Small cap IPO market surging. We're not a big buyer of IPOs because those can go bust. There's no company, obviously, that IPOs as a multi-billion. Well, it's rare. It does happen. But mostly IPOs are small companies that grow into big companies. Microsoft started small, and now we know the rest of the story, just like Apple and even NVIDIA, right? So franchise expansion accelerating. The opportunity here is early stage investment platforms. My screeners are software tools that allow you to go out and look in the market before a stock goes IPO or brand new IPOs and see what the trajectory is and see what might be a possible good investment for CG, well, all the programs, but especially CG and DS. Number 8, unintended consequences. Just couldn't see this coming, so to speak, right? What nobody saw coming, housing, construction, labor shortage due to the manufacturing boom. So all hands on deck. We need carpenters, we need plumbers, we need electricians, we need people that can design all kinds of infrastructure for sewage treatment. The municipalities are hiring like crazy to keep up with the builders' demands. These are all positive. State tax collection surging, exceeding the revenue loss estimates. That would be the loss from federal taxes and state taxes making up for that. Although eventually, I think you're going to see federal and state taxes dwindling as economic activity supplants, not supplements, supplants the need to actually tax our citizens. Wouldn't that be incredible if the federal and state income tax, we still have 10 or 11 states that do not have state income tax. But imagine if those all went away because the states didn't need it because of the additional sales tax that was coming in, our corporate tax. All right. International tax competition is forcing other countries to respond. Number 9, revenue versus reality. $4.5 trillion in tax cuts paying for themselves. What's the early evidence on this? Well, economic growth is accelerating beyond projections, and that's from the White House, Social Security Administration, Congressional Budget Office, all these sources. All right. See the huge footer at the bottom. Tax base expansion from business formation. If you are starting a business and hiring more, they're making payroll taxes, at least as long as we have our federal and state income and local taxes. All right. And that's fine. Taxes being paid into the system, people working, making money. It's all about growth in every area here. Tariff revenues exceeding expectations. Hundreds of billions of dollars from tariffs are going into the U.S. Treasury. Now, I would like to see those pay down the deficit and pay down the debt. All right. Can't technically pay down the deficit without paying down the debt first. But I would like to see that happen. I'm not sure how that's going to play out. We'll see in January how that works with the next fiscal budget. The fiscal health deficit impact less than feared, and that's a good thing. And finally, the portfolio winners and losers. So the 6-month scorecard, which sectors got it right? Manufacturing and industrial, for the reasons I just mentioned, up 35%, and we're there. Regional banks in manufacturing states up 28%. So we're there too. Clean energy down 45, then up 20. We're staying away from clean energy right now because of the incredible volatility, but we are watching it like a hawk. All right. State municipal bonds, massive spread divergence. You can imagine that a state bond in Alabama or Tennessee is going to be a little easier to trade than a state bond in California, Massachusetts, New Jersey, and Illinois. I wonder why. All right. This is what the president was voted on, and he said this is what people want, and he's doing it.